Hey everyone, Michael here with the Bitcoin Way podcast. Appreciate you tuning in. Today I've got Sam Callahan on the podcast. We talk about DOGE and their ability to pull out some of the corruption in government spending. We talk about tariffs and taxes, SAB 121 repeal, a whole host of topics. Really think you're going to enjoy this episode and get a lot out of it. Alrighty, like I said in the intro, I've got Sam here with me. Sam, welcome to the Bitcoin Way podcast.
Thanks, Michael. Happy to be here.
Yeah, I'm looking forward to this. Like I was telling you offline, there are so many things going on right now that I would love to hear your commentary on. And I think it would be very useful for a lot of people to sort of break down what these things are. Let's start with a tweet that you shared, though, about DOGE. What you said was two things can be true at once. DOGE will drive some positive change, reducing waste and corruption. Two, DOGE will also fail to make a meaningful dent in the fiscal deficit. So first of all, I guess for clarity, we're not talking about DOGE, the digital token. We're talking about DOGE, the Department of Government Efficiency, or whatever it's called. So, why don't you? One thing I'm still not completely clear on is DOGE's ability to act on anything that they find. It seems like more an investigative group, and ultimately maybe there's some other mechanism by which changes actually have to occur. But could you explain maybe DOGE's mission, what sort of authority you understand them to have, and why? And I agree with your comment based on everything I know. Why you believe what you said?
Yeah, well, that's a good question in terms of what they can actually legally get done. I mean, I don't think this has ever happened before in terms of, basically you have like a executive order that creates this new Department of Government Efficiency. And it's like almost like an arm of the executive branch that's just going into the different departments. And there's a lot of question marks in terms of their access to confidential information and like whether they're allowed to see these things. And so I think there's a lot of question marks there in terms of what they can actually get done. Right now, it seems like they're kind of auditing things and figuring out where the government waste is. And we all know that there's a lot of waste. I guess I'll first say that I support the mission. Like, I think the government's become way too bloated and there is a ton of waste. I mean, a perfect example is defense spending because they've never passed an audit, one time. Like, there's just like a lot of disorganization. I mean, if you're more cynical, you'd say corruption. A lot of waste going on in terms of the government spending, and obviously the government spending is the root of a lot of these problems that Bitcoiners talk about in terms of the deficits, debasement, and the continuing persistent inflation. And so they are getting down to like the root problem, which is reckless government spending. So, I mean, as a Bitcoiner, you have to kind of applaud the mission, and I do. Um, Now, whether how effective they will be is another question because if you look at the government spending, like what we actually spend the money on, actually run the numbers, you'll find that 61% is mandatory programs like Social Security and Medicare, and another 16% is on, or 13% is on interest expense. All right, so we're looking at like 75% of the budget is like on interest expense, which Doge can't really control. That's interest rates in the Fed. And then mandatory programs, which any changes to the funding, the benefits, or the eligibility requirements, like the age requirements for Social Security, that has to go through Congress. So it's kind of outside Doge's control. And so while I support the mission and I think they will find waste, I mean, a perfect example was this large omnibus bill that it was like this big. And then after Doge just made noise about it, which I mean, they're kind of widening the Overton window because they're just like raising awareness about how wasteful the government spending has been. And so it was like this, and then it was like this big. And I thought that was kind of an interesting picture and comparison and how they could be effective here. But, like, some of the spending, like, Elon had a space late last night about Doge, and they brought on this senator who I'd never heard speak before. I'm forgetting her name right now, but she said, like, we all know some of the insane things that government spends money on, that they're laughable, right? Like, and she said 2 of them, which stuck in my brain. There was, like, a study that the government paid for with taxpayer money of how shrimp can run on treadmills, you know? And there was another one with, cats, how much fur balls that cats cough up going to a spa. Like, I mean, just
Well,
completely ridiculous things. And So obviously, like, that was what the senator said, and I'm just believing her that those things are true because 'cause they're absolutely ridiculous. And so I support the mission, and we can get into the more the numbers of why I think they actually won't make a meaningful dent in the fiscal deficits. It's along the lines of what Lynn and I had recently wrote about fiscal dominance and nothing stops this train is a common meme, and love to get into some of that. But some of these numbers that are getting thrown about by people, I would say including Elon, about like $2 trillion deficits, spending being removed, and uh, there's a lot of optimism around it, and I just like want to manage expectations a little bit. Yes, I support the mission to reduce government waste, and I think they will drive some positive change. But um, when you really dig into the numbers, I just don't see the fiscal deficits dropping anywhere, uh, you know, anytime soon. And so
S-
that means inflation continues and, you know, good for Bitcoin, honestly. But yeah, I'll stop there.
So would you anticipate then at the end of a Trump presidency, even if Doge is quote unquote successful at removing, to your first point, some of the waste and corruption, would you anticipate deficits to, first of all, well, I think you've sort of framed that out, deficits to continue, but also US federal debt to be higher than 36 trillion 4 years from now? Like, is that the nothing stops this train? Like they simply can't, there isn't enough that they can cut readily without the political backlashes to make it impossible, like the Medicare, Medicaid, Social Security, all those things.
Yeah, I mean, I would 100%. Like I would think
Yeah.
that the deficits will continue and that's the debt's going to go higher.
Okay. Yeah.
People need to understand like a deficit, there's two sides of the equation. There's the revenues we bring in through tax receipts, right? And then there's what we spend money on. And the difference is that we're spending more than we're bringing in with tax revenues. And that's the deficit. And that's why we have to continue to borrow money and add to the debt, right?
Yeah.
And so, it's like people focus on the cuts to spending, but there's a couple things to consider. It's what's happening on the other side too. So when Trump talks about continuing the corporate tax cuts, for instance, and actually increasing those, like I'm a pro business guy, but objectively, that'll likely in the short term result in decreased tax revenues. And so that widens that gap on the other side of the equation, right? Less revenues coming in. And then, the other thing that so you have to think about tax policy a little bit as well. And then, now long term, I think that less taxes on corporations is a good thing because it leads to more reinvestment and economic growth. And that's a good way to bring up tax revenues, right? By just like growing the economy well. And so less money going to the government in general, I think is a good thing. But in the short term, I think there could be some pain and there would be less revenues coming in because it takes time for that to develop, right? For
Yeah.
or companies to reinvest and spur economic activity.
Do you have a gauge as to like what sort of, if something dramatic was done that might reduce, like, lower taxes on businesses, or abolition of the income tax, what is the lag for achieving some of that long term growth that offsets the short term pain and the widening of the deficit, perhaps?
Yeah, I don't really have a good. I don't know.
Yeah.
That'd be really difficult to measure.
Yeah.
I don't know what the
Years
lag
though,
would
you
be.
think?
I would think years and
Yeah.
probably multiple. You know, at least a couple administrations, like right 4-year
Yeah.
presidencies. It would take time for that to develop. The next presidency would probably get a lot of credit for the economic growth that would be implemented from the tax policies of the prior administration. It's typically how it goes. The other thing to consider, though, is that a lot of the economic activity, and this is the thesis of fiscal dominance, where economic activity is increasingly being driven by these large fiscal deficits. Um, and if you cut the spending, try to reduce those deficits, what you'll see is a fall in asset prices.
Mm.
And the US economy is highly financialized, meaning that tax receipts are deeply tied to asset prices. And to simplify it, it's simply, capital gains tax. It's people feeling wealthier and so they spend more in the economy because, they see their portfolios rising And so a lot of the tax revenues are really deeply tied to the stock market and asset prices, and that's unique to the U.S. economy. And so if they cut spending, if Doge like miraculously was able to cut a lot of the spending, um, what happens is the asset prices would likely fall, and then you'd have a drop in the tax receipts, and so it kinda hurts the opposite edge of that equation, where any kinda cut in spending actually results in reduced tax revenues, and so the deficit remains. You know what I'm saying?
Yeah, yeah,
And
it
so
just
that's
moves with it nominally, yeah.
right, so the drop in tax revenues offsets any of the cuts to spending.
Got it,
And
got it.
so that's another part of this equation that's really, you have to think a little bit through it of why nothing stops this train. And so Canada, in the past was able to cut spending a couple of decades ago, but they have a different tax base. It's not as financialized. So they were able to successfully do it to implement austerity measures. And then there was Germany a couple decades ago. They were able to successfully do it as well because their economy is like very manufacturer based, right? Their export economy. So they were able to like implement austerity measures and balance their budget. The US is very financialized. And so if we do that, we'd have these dynamics where our tax revenues would really fall greatly with the cut spending. So that's a factor that people need to get in their heads. And, I'd love to dig into the numbers a little bit more of why Doge likely won't make a dent in the fiscal deficits because it really just comes down to math and the numbers.
Yeah, yeah, let's talk about it, and to the extent that that ties into the work you've done with Lynn, would love to hear all about fiscal dominance and why nothing stops this train. I think understanding some of the math behind it would be very helpful for people.
Yeah. So, I guess we'll kind of work backwards a little bit, but if basically the problem with inflation right now is driven by the fiscal policy side of things, where increase fiscal deficits, so multi-trillion-dollar deficits, it is the main driver of economic activity and then, inflationary pressures. And because of that, like the Fed raising interest rates or dropping interest rates, it actually doesn't do what it wants to do, which is to bring down inflation by raising interest rates. It actually just increases the interest expense on the giant mountain of debt, which widens the deficits more, which continue to drive the inflationary pressures. So it's like when we reach these periods where there's a huge debt burden, high debt to GDP ratios, the Fed's traditional monetary tools to bring down inflation no longer become effective and actually become counterproductive because they widen the deficits more because the interest expense increases. And in that period, to address it, it really comes down to the fiscal side of things. So, you have to go down to the root problem. And no matter what the Fed does over there, they're not going to actually be able to stabilize things without the government and the fiscal side getting their house in order and balancing their budget. And so, again, I applaud the mission of DOGE because it actually gets down to the root problem. Now, why won't they make a dent? Well, last fiscal year, we spent $6.75 trillion, and 61% of that, as I mentioned, was mandatory spending. So it's these Social Security, Medicare. Now, um, those take an act of Congress, like I said, to change it. But if you actually take it further and look at the rest of what we spent money on, and I'll kinda go down and just, like, make sure I get these numbers right. So 13% was on net interest. So the Fed could change that by cutting interest rates, but again, that's outside the purview of, like, DOGE, what DOGE can do. The DOGE can't tell the Fed what to do in terms of the interest rate policy, okay? And so then there's about 26% of what we spent on is discretionary spending, okay? So that's actually something where DOGE could go in and maybe start cutting some things. And so still we're kinda working with basically a fourth of the spending budget. But even if you go into the discretionary spending, half of that was defense spending. And so defense spending, obviously, when you look out onto the world, it's very heightened geopolitical tensions. And so I just personally really doubt that they're going to get away with, doing any kind of defense spending or cuts. It doesn't seem politically attainable right now. And also, you just look at the world and like, got to stay competitive. Geopolitics kind of takes precedent in times that are becoming increasingly uncertain. And so I don't see half of that discretionary spending really getting touched. And if you look at the CBO's projections, they expect the defense spending to increase. Furthermore, if you look at the GOP platform, there's two things. One is they promise not to cut Medicare or Social Security, and President Trump said that multiple times. And so that 61%, they promised not to touch it. The other promise they made was that they wanna strengthen and modernize our military, which sounds expensive. And so, again, I don't think that discretionary part, the defense spending part, is gonna really be touched. Now they might find some waste because, as I said, the defense never passed an audit, but that's not gonna be a majority of that. So I just don't see that getting touched that much. Now that leaves 14% of the spending, that is non-defense discretionary spending, which is the prime target DOGE, which is only $948 billion of the $6.75 trillion that we spent. And so well below Elon's projections of $2 trillion. Realistically, only 948 billion can be cut. And even if they did cut, you know, every single federal worker, um, I estimated that they would save only $200 billion a year. And so this
Wow.
is what we mean when we say that, um, you know, the spending is structural. So you hear that a lot. Um, why it's structural, why people say that is deficits, fiscal deficits are typically, we're supposed to be countercyclical in nature, meaning when there's a recessionary period, the government would ramp up spending to kind of pull us out of the recession. And then once economic growth starts to increase, um, they would basically tighten the budget and run surpluses and balance the budget so that during the next recession, we would be able to do the same thing without blowing out the budget. Now, over the last multiple decades or so, we've run deficits even in good times. And a perfect example is lately, where the unemployment rate is near historic lows, economic growth is good, above normal, and we're still running multi-trillion-dollar deficits. Well, why? And it's because we don't really have a choice. And it's because the deficits are related to aging demographics, rising healthcare costs, and then compounding interest expense on decades and decades of accumulated debt. And so, those are every single year, there's more Americans that are becoming eligible for Medicare and Social Security and these entitlement programs. And they were promised, they paid into them. And that's just going to continue as our population continues to age. And so that's why these structural deficits, like if you look at the CBO's projections, 87% of the spending increases over the next decade come from mandatory programs, Medicare, Social Security, and interest expense. Okay. So that's what people mean when they say it's structural in nature. And that's why, like, DOGE can really attack only a tiny sliver of the spending. And if we don't meaningfully change the entitlement programs, um, through some piece of legislation, or somehow untangle our tax policy with asset prices, or both, we kind of need both. I don't see how these fiscal deficits won't continue. And because the fiscal deficits will continue, and they're the main driver of economic activity today and inflation, then what we expect is that just continually hot economy, continually hot inflation reads, and that's like that's fiscal dominance.
Yeah. Okay, so hypothetical of all hypotheticals, if you had complete control of Congress, if you could sign executive orders on behalf of the executive branch, if you could control the Federal Reserve and you were Secretary of the Treasury, what is it that you would do? And then maybe juxtapose that with what do you think what's the likely outcome, which I suspect we both sort of know, but like if someone with your mindset, your recognition of the problem had all of the authority you needed to resolve this best you could, what would that solution look like?
Well, look, I'm a Bitcoiner. I don't pretend to be some kind of expert in policy or um, but if it was me, look, you have to change the entitlement programs. I mean, to make any kind of meaningful dent in the spending. I talked about how 87% of the spending is really coming from those entitlement programs plus interest expense over the next decade. And, ideally what you'd want is growth, like real economic growth, like a productivity miracle to help grow our way out of this. That's the best case scenario. And, one of the things of any kind of nation is you have to support young people. Like you have to, you know, make sure that they understand that if they're buying into some kind of entitlement program, that they're going to see the fruits of that labor. Like right now, I mean, it's really fair to say that the way the math works out, that Social Security is kind of like a Ponzi scheme. Like a young person isn't going to see really a cent of it. It's just because how the math's set up. And so I would do some kind of policies that, you know, support young people and reduce entitlements for the older people. And I think you just kind of have to. And it's going to be very politically charged, but in terms of making any kind of meaningful debt, that's important. Now, I think what the DOGE is doing in terms of trying to find waste, like the audit, the fact that the defense never passed an audit, I think there's a lot of wasteful spending throughout the government. So I would do some of that for sure. Um, Now, in terms of productivity, what's interesting is, you can do productivity really comes down to two things. It's the size of the labor force, and then it's the the productivity of the labor force. So the quantity and the quality of the labor force. Productivity is just a measure of how much GDP somebody produces per person, so to speak. And when you look at the labor force size, this is why the math doesn't work out with these entitlement programs. Because back in when they were kind of implemented, I think in the 60s, um, they got two things wrong, which is one, we're living longer than
Mm,
we used to. And then two, they didn't expect the birth rates to plummet, which,
right.
I think both of us would say money is part of the equation there, broken money.
Yes.
Now, that's why the math doesn't work out. If you look at the ratio of active workers versus retiring workers or, older generations versus active workforce, that continues to decline. And so we have a shrinking labor force and larger retirement, population or demographic that has to support them.
Right,
And so
right.
that's why, like, immigration policy is one way you can expand the size of the labor force, but we're seeing the opposite of that, right? We're seeing more protectionism. And so what we got to do is we got to get more out of the labor force that we have. We got to increase the productivity. Now, how do you do that? That comes down to education. So making them more skilled. And I look at AI, and it's one of the reasons why I'm kind of bullish on AI from a productivity standpoint, because if you can have a very patient tutor available 24/7, that could really boost the education of the labor force, make them more skilled and boost the productivity. So that's great. That's just one example. So that's one way to do it. And there's also capital investment. So getting better tools for your workforce. It could be something like an ergonomic vacuum for people on a conveyor belt so that they don't get hurt as much. And, that's a way to like increase productivity. So capital investment. And then the other thing is innovation. And innovation's the number one driver of productivity. And it's kind of related to capital investment. And it's it's so important to be pro business because most innovation and innovative breakthroughs happen from small businesses, from startups. And when I think out at the world, like what I would do from a policy standpoint is just support businesses, small businesses, as well as make it easier for access to capital in different ways so that they can get the funding they need. So reduce deregulation, reduce some of the red tape, and then hopefully that drives innovation, which drives productivity. And I think Bitcoin is one of these technologies that actually will drive productivity because it allows people to save. And so we can get into that because it's like a different concept. But I'll stop there because I would change the entitlement programs, um, make policies that support the young people more because I think the pendulum shifted too far, I would try to find government waste where I could and reduce it. And then I would deregulate and try to boost productivity in different ways to
Yeah.
grow our way out of it.
Seems like there's an appetite for some of what you said, right? I mean, I'm always skeptical of politicians, but I think to Trump's credit so far, he's signing some, what seemed to me at least to be productive executive orders. But I think at the end of the day, the important thing you hit on there is entitlement programs. I mean, I don't think there's any political willpower to like really do the work that needs to be done because the pain on a large voting block would be massive. And I think the
Mhm.
challenge is my dad's 67 years old. So if he lives to be, for 20 more years, we've got, we have this problem of, and so it's not to single out like a generation or certainly any individuals, but we have the problem of boomers are going to be around for a while collecting while, to your point, an ever decreasing pool of workers are funding that, and I don't feel like we have a 20-year runway to get through this large aging population. And again, I don't have the data probably that you have to support that statement, except it seems unfeasible to me. Sam, we can dig into anything around this that you want. Um, Otherwise, I mean, I'd love to hear your thoughts on some of the other things that maybe affect Bitcoin more directly.
Yeah, sure.
SAB 121, FASB. But is there anything you wanted to touch on that
Well,
maybe
the
we
last
didn't
thing
get
I'll
to
just
there?
say, maybe I mentioned it just briefly, is just like the productivity of Bitcoin is the reason is like if I've studied like productivity and because like you're right and some of the things you just said, but if we could somehow make that labor force more productive, then we'll be fine. We'll have a really high growth economy that creates a lot of abundance for people. Now, and I said that innovation kind of drives productivity. If you look at the long term productivity growth, it's around 2.1%. But, you would think like the internet, right? Like that should have boosted productivity substantially, right? You would think so. There's like we have the World Wide Web, communications, mini computer in our pocket that does all these things. But there's a famous saying from this economist called Robert Solow that said, the computer age is everywhere, but not in the productivity statistics. Because
Mm,
from 2000, it spiked briefly around 2000 in terms like over 3%. And then from 2009 to like 2019, productivity was like 0.8%. So well below 2.1%. Now, this is when it gets down to Jeff Booth's thesis because it's like, was the productivity there or was it just stolen for the majority of people?
mm.
Right. It's because of the debasement of the currency. People's being unable to save. And if people are able to save, it's actually, I think, one of the main drivers of productivity because um, when individuals and businesses can save, they start to think long term and the fruits of their labor is not debased. And so then they start to say, like, um, I have this crazy idea. Like, it's crazy. I got this invention. I don't know. Maybe I'll explore it because like my savings are actually appreciating over time. And I
Mm.
have a deflationary money that is allowing the productivity of society to be shared. And that's how you get like real innovative breakthroughs is people's ability to save. And so it's kind of like a precursor to more capital investment, which leads to more investment or more innovation. And then that kind of can spur a productivity boom. And so I think Bitcoin is just one of these technologies that could be paired with, say, nuclear fission and fusion, AI, that could help us potentially grow our way out of this debt problem, which would be the best scenario. So a little bit optimistic, but that's why I say that Bitcoin could potentially be a part of this productivity miracle.
Yeah. In other words, people are sitting on the hamster wheel just trying to keep up with, with life and expenses and, just live their day to day. If they had the ability to hop off because of hard savings that they could fall back on and do some of these things that you're talking about.
Yeah.
Um,
Start that business, build that invention, that kind of thing.
yeah. Yeah, absolutely. Well, so let's talk about before we get to some of these other sort of big but smaller items. Let's talk about the elephant in the room, and that's the U.S. Digital Asset Reserve. Because I'm curious to what extent you think. I'll just give you my opinion, and I think it's probably sort of a contrarian take. Is just a real small government guy, or is an ideally almost no government guy. I tend to be wary of government, certainly printing a bunch of money to buy Bitcoin and reducing individuals' ability to accumulate. But it also concerns me just more government power. I think Bitcoin's finite supply over the long term leads to a uh, reduced power by governments, even if they accumulate it because they can't print more of it. But in the short term, I could see it giving the governments who stack sooner, a lot of sway in geopolitical events. What's your take on? So it was all a lot to say, not much, I guess. But what's your overall take on the We're calling it the digital asset reserve, I guess, because that's sort of how it's been framed in the executive order. What do you think comes of that? What's your opinion on what that should look like, if there should be one, and how you think that impacts maybe some of the things we've talked about up to now?
Yeah, I think I just think about like incentives and the game theory of Bitcoin, like when it comes down to it, and that every single institution will benefit from Bitcoin. And so it's natural for governments, banks, institutions, individuals to all be attracted to this superior reserve asset, superior form of money. I mean, and so I kind of think of it, it's inevitable. And we
Mhm.
already have El Salvador doing it. But there's a game theory at play here. Like if the United States doesn't do it, I think there's likely to be other countries that do it, especially with the increased, trade wars, the tariffs, trade restrictions, the seizure of treasury reserves that the United States did to Russia. There's been this huge movement from governments and central banks to diversify their reserves to gold. But as we know that Bitcoin has some superior properties to gold and is also neutral in a political and censorship resistance, which is really attractive to these other countries. So I think it's kind of a natural development on the Bitcoin adoption path or cycle, so to speak. And so that's how I first started to think about it. And then, in terms of what it should look like, right now it's like a stockpile, which they're just taking the existing Bitcoin that they've seized through various enforcement actions and just kind of saying, like, we're going to hold on to it. We won't sell it. And then there's like Cynthia Lummis's, which is the Bitcoin Reserve Act or Strategic Reserve Act. And they're kind of figuring out ways to actually buy Bitcoin, right? Which is a little bit different. And so the executive order creates a working group that'll explore the possibilities of creating a digital reserve stockpile. And so the wording is kind of important. Um, what it should look like I focus primarily on Bitcoin. Um, primarily, I mean like only. And I, there's a lot of hoopla around digital assets and not saying Bitcoin. And I get it. Only Bitcoin is, I think, considered decentralized and actually leaderless and had a fair launch, fair distribution, and it's actually scarce. There'll only be 21 million. I think it's digital commodity money. And so I do think it only makes sense for it to be Bitcoin. Now, the reason why I think maybe we all want to shrink the government is that I would say the government's the worst allocator of capital. So I don't think we should be surprised if they make the mistake to go down the route of having other digital assets in there. The beauty of it is that Bitcoin has certain monetary properties where everything trends to zero against it. And even if a sliver of this, you know, stockpile might be in other digital assets, over time, Bitcoin will just make up a greater and greater percentage of it as it appreciates versus them because of its monetary properties. So in the long run, it'll be a 99.9% stockpile no matter what. That's that's kind of how I view it. I know there's a lot of anger about that, but I just think more long term, and I generally see it as a positive development. and kind of a natural development.
Yeah. Yeah, I definitely agree it's inevitable. I think my hope is as much as, I think we'd all like our bags to be pumped, my hope would be more friends and family, individuals, small businesses, they get to the party before the federal government does, but
They've
it's
had
not
a
looking that.
chance to,
Yeah,
this
yeah,
is
no, I
we've
know. It's
been
not that's the sad thing, it's not looking that way. Like, all this news and I still am not getting text messages from people asking, "Explain this thing to me," you know?
Yeah, I mean,
It's
people
crazy.
just had to open a book, read an article or 2, and
Yeah,
make the
yeah.
decision themselves. It's
Unfortunately, they were all reading the Wall Street Journal and the New York Times for too long instead of the Bitcoin Standard or
yeah, and a
something
lot of
useful.
people, unfortunately, they need that, stamp of approval, that they wait for the, government to tell them what's right and what's wrong, which I thoroughly, hope people rethink that, but they need that, and so they'll wait for the government to do it, then they'll say, "Okay, I can," "it's safe for me to buy some Bitcoin." That's
Yeah,
just how it is.
yeah. No, you're right. Well, it government approval, speaking of, let's talk a little bit about SAB 121. Why don't you explain what it is and, it was repealed, right?
Yeah.
Okay, yeah, so what
SAB 122.
well, 122, there you go. So what does it mean for banks, for Bitcoin? I assume it's, it's bullish. It gives that permission I think
Yeah.
some people are looking for.
Yeah, so SAB 121 was a rule, um, slapped down by the SEC. It was basically an accounting rule that made it prohibitively expensive for banks to custody Bitcoin on behalf of their clients. And so it basically treated Bitcoin very differently than every other asset class, where if a bank had to hold it, it had to treat it as both an asset and a liability on its balance sheet, even though they just held it on behalf of their clients, which means they basically had to allocate like a certain amount of reserves to back it up. So like it made it very expensive for them to do it, which was basically like an effective ban, prohibited them because
Mhm.
like it made no sense to them to do it economically. And so this was fought, because it made no sense, right? I mean, the SEC brought it down because they said, we're trying to protect consumers and, um, protect the traditional banking system from like intertwining with digital assets too much. And so that it wouldn't make it financial, like unstable. But what it really did was push a lot of these clients into like the FTXs of the world. And so like very unregulated institutions, which really hurt people. And so they almost like contradicted themselves when they did that. So the rule didn't make sense. Um, it was, went through Congress that it should be repealed, and then Joe Biden vetoed it. So it was bipartisan that the rule should be appealed last year, and then Biden vetoed it, which is wild. And it was either even like the American Banking Association and Bank Policy Institute, these lobbying groups, wrote letters to Joe Biden saying like, "Hey, we think we want to be able to service our customers and be able to provide them with safe, highly regulated custody options, and it would actually be safer for you to repeal this rule and not veto it." But he didn't listen to them either, and so there's a lot of uproar about it, basically. And then, one of the first things that the SEC has done since is rescind that rule. And so it's a positive development, because now these banks can basically provide services for their clients on behalf of their clients. So they can custody it, they can um, do maybe lending products and do different things. And so it kind of will just kind of drive adoption further, provide more financial services for Bitcoiners from these institutions. And like, for example, like you and I both, there's a different spectrum of custody options. And like personally, I like to hold my own keys. I think not having counterparty risk and using Bitcoin in a sovereign way, that's personally very attractive to me. Now, there's certain institutions as well as investors that might not feel comfortable with that. So I think there's a huge spectrum of custody options that should be available to people with different trade-offs and risks. And as long as people understand those risks that they're taking, and I don't really see that much of a problem with it. I guess I'm a free market maximalist for custody solutions as well. Personally, I like to hold my own keys, and I think most people should look into that. Um, But these banks, BNY Mellon, State Street, these are some of the oldest institutions in the world. They were building out Bitcoin custody platforms for years, years. And then State Street just had to close up shop because of these random rules that were placed, discriminatory rules against Bitcoin. They had to shut down their entire, uh, platform, lay off a bunch of their workforce that was working on it. BNY Mellon, to their credit, that continued to build despite that, and then they were finally able to do it. So, like, last year, like, the SEC just randomly, like, allowed them to bypass the rule for some reason, but now it doesn't matter because they rescinded it. But BNY Mellon can now offer these services, and it's, like, another very respected, custody solution that people can use if they want to, especially, like, financial advisors and things, where they're kinda restricted from regulations from holding your client's private keys or something like that. And so you just think about what adoption would have been like if we didn't have that rule. It would have been accelerated probably. Um, Now I will say that there's kind of other factors to consider here, and it's that the SEC is not the only regulator of the banks. Had this accounting rule, which now makes it better for them to more economically favorable for them to custody Bitcoin on behalf of their clients. But there's still the OCC, the FDIC, and the Fed that are all regulators as well. Now, the Fed put down a crypto policy statement last year, 2 years ago, prohibits state chartered banks from holding Bitcoin on their own balance sheets on principle. So, like, a big bank couldn't set up a treasury reserve strategy right now for itself.
Mm,
And that probably limits them to setting up kind of solution, like payment solutions using Bitcoin rails or something like that, or like Lightning. Like they couldn't set up any kind of products or services like that as it stands today because of the Fed, not the SEC. And
mm,
then the OCC and the FDIC have been blocking banks for a long time and Bitcoin companies from working with banks to develop different products and services. We know this because Coinbase's lawsuit just released 25 FDIC letters. You can read them yourselves. Banks were thinking about developing debit reward cards, like Fold, but they were thinking
mm,
about doing that. They were thinking about doing lending. They were thinking about having buy and hold, and withdrawals in the banks platforms themselves. All of that was stopped because of the FDIC, and it wasn't like an outright ban, but it was like if you're a bank and your regulator says like, "Hey, we really don't want you to do this," or, "We're gonna be angry with you." Like, you don't wanna tick off your regulator if you're a bank.
right.
They'll, like, make your life a living hell. And so it was, like, effective ban because it was, the reputational risk and the regulatory risk, which was, like, tacitly implied by these regulators, was there, and it prevented these banks from developing those products. So we need some of those other regulators to get on board, and I think that is happening through external pressures from the changing administration, as well as a change of leadership, and to kind of fully open the door. But SAB 121 is just one piece of the puzzle that now is gone. So kind of a thorough overview there, but
No,
that's how I see it.
I think that's helpful. So do you think over the next year, couple of years, we're going to see a lot more of these offer? Like, is your sense that banks are itching to get into the game? Because it sounds like there are a few who were starting to build, and they were doing so well in advance of it really being possible. But now maybe that the floodgates open. Like at the end of 2025, is your anticipation several notable banks, maybe even some smaller mid-sized banks are now doing a lot of the things that they just simply couldn't? Or is it gonna take a long time for them to build these solutions, you think?
I think the bigger banks will be faster because they have more resources, and especially with technology than smaller banks. But yes, like hands down, like you see it from those interviews from Davos. It was basically every single major uh, bank CEO was asked about Bitcoin in Davos, which kind of speaks to how Bitcoin has just grown up. It's like the topic of conversation. But they all said the same thing, which is like this was before SAB 121 rescinded, like maybe earlier that week. They were just saying like, "Hey, we're just waiting for approval to be able to work with this thing in a way that is, economically makes sense and reduce regulatory or more regulatory clarity. And then I think the CEO of Bank of America said banks are going to come in a big way. That's what he said in those quote. And so I think we're going to see that for sure. And I think now that Tab 121's reversed and even the executive order that you talked about with the stockpile, there was other things that were really great in it too. Like, there was language that was more after talking to Joe Carlasari, it was more aspirational language, but I think it was a great sign. The language protected the right to self-custody. It protected the right to mine. It protected the right to develop open source code. So that was great. It also protected, or prevented discriminatory access to banking services. So some of the stuff that we talked about. So that was a part of it. Banned central bank digital currency, central bank digital currencies. That was great. And as well as created that working group that will explore the stockpile. So um, I think all those things now that Bitcoin companies will be able to access banking services, as well as banks on the other side wanting to develop services, will really accelerate um, Bitcoin adoption.
Yeah. Do you think one thing that I've felt is that if we can just have if even if like a strategic reserve doesn't happen, but right, like a lot of the regulatory uh, like the Operation Choke Point, those sorts of things just disappear for 4 years. That might be enough time to get us escape velocity on some of these things. Like once that genie's out of the bottle 4 years from now, it's not gonna be possible. Like I think if we'd had a Harris administration, and I've got my issues with Trump too, but like I think if we'd had a Harris administration, my feeling is that we would have just kind of kept trudging along, and this might be the window of time to build and grow to where 4 years from now, we get a new administration that doesn't like this stuff. It just doesn't matter anymore. Like it's too late, and it's maybe taking on sort of a whole new life within banking, within institutional adoption. Is that sort of the sense that you have, or am I maybe being a bit optimistic about what could the turning of a new administration a few years from now?
No, I think it just uh, what it comes down to is just I think Bitcoin is superior technology first off, and I think that once the banks allocate the resources and the time to develop products and services, then there's no going back. That just moves
Yeah,
in one direction, no matter what the administration is. So I think, as these things develop, I mean, kudos to the industry for growing as much as it did with all those barriers in place. So you just imagine what it's like to have those barriers down. And yeah, so I think that genie's out of the bottle. It's really not going to go back in, no matter what the new administration does, because what the banks will find is that they can make a ton of money off Bitcoiners and providing Bitcoin services. And like the world wants Bitcoin. Everyone wants Bitcoin. And and then they're gonna just spend a lot of time and resources building out these custody solutions. There'll be acquisitions of Bitcoin companies from these big banks. Um, and that genie's out of the bottle. Once they remove these rules, regulators, maybe there's some kind of piece of legislation, and the regulators finally allow the full entrenchment of Bitcoin into the traditional financial system, which it's still not fully entrenched. That's never going back.
yeah. I think you're right. Hey, let's talk about a company that's been bucking traditional financial norms for a little while now, MicroStrategy. So this is one that, you know this about me. I'm not a financial guy. So like I'm reading a lot. I'm learning as much as I can. MicroStrategy just released an additional new offering, Series A perpetual preferred stock called Strike. Could you maybe, I mean, just very, very briefly, kind of lay out what it is MicroStrategy is doing? What this? I assume you've looked into Strike a little bit, or you probably
Yeah.
at least understand the fundamentals of
Yeah,
it.
yeah. No, I'm
It's
looking
kind of your
into
world.
um I you know, at this point there's groups of individuals who only focus on MicroStrategy. But I do follow it relatively closely, I guess. But I just think what Michael Saylor's doing and what he's talked about a lot is he's basically delivering Bitcoin in uh, securities or investment vehicles that other investors can want and need to gain access to exposure to Bitcoin, to exposure to Bitcoin. And so there's some investors out there that literally can only invest in bonds because of their investment mandates or equities. And there's people out there who simply can't invest in Bitcoin because of its volatility for different reasons. Like it doesn't fit into their VAR models or it's just too risky for maybe they just think that's risky and they just don't have the stomach for it. And so what he's taking, and he's called this like a transformer, or he's transforming raw Bitcoin into different forms of Bitcoin in different securities. So like MicroStrategy stock is like 2x the volatility of Bitcoin. So some people want that. Some people want more volatility. And so that's why they get like a leveraged micro. If they want leverage Bitcoin, they can buy some MicroStrategy stock. Now there's some bond investors that want some downside protection. They want the convertible debt. Maybe they can only buy convertible debt. Maybe they're convertible debt traders that can only trade these things. You know, like the volatility of Bitcoin is like an asset that Michael Saylor is delivering to them because these the way options work, the way the convertible debt math works, the more volatile the underlying asset, the more valuable these options can become. Um, and so MicroStrategy's convertible debts offering that they've over the last year, it's been the best performing convertible bonds on the market, and they've actually outperformed Bitcoin because they've become so popular. And it's like Bitcoin with a little bit of a call option to basically convert it to common stock in the future, say at like a certain date, like in 2029, 2030. You have the bond, which I mean, it's basically downside protection because you always have that principal back that you invested in the bond. But in the future, you can convert it to the underlying stock. So it's almost like this like downside protected exposure to MicroStrategy stock. Now, the preferred stock that he just offered is a little bit unique, and it's just kind of like another vehicle. And so the problem with convertible debt is like not a lot of regular investors can get convertible debt. Like it's like you can't just go buy convertible bonds. It's usually like institutions or a regular retail investor can't get exposure to that downside protection vehicle. Um, and so what his new strike product is basically like a combination of the two. And it's also accessible to the regular retail investor because it's just another stock ticker. It's just STRK, I think. And so what that is it pays a dividend like a bond. So like 8% dividend, which is like a comparable to like a high yield debt instrument, high yield bond. And so pays 8%. It's perpetual, meaning you can always like convert it to the common, which is different than the convertible debt because like I said, that usually goes out to like a certain date, like 2030, 2031, 2032. But if you have a really like decades and decades long view, if you're more of a long-term investor and believer in Bitcoin, you don't really want that. You just want like unlimited exposure. So that's a little bit of a difference too between the convertible debt instruments and this new preferred. It's unlimited and it's 8%. And then it's a little bit less volatile than the regular common stock. So if somebody wants a more exposure to Bitcoin, but they want less volatility than the MicroStrategy stock and Bitcoin, and they want a dividend, so they want like a little bit of income every year, and they're really long-term investors, so they don't, unlike the convertible debt, doesn't have a cap, then this would be a really attractive product for them. And so this is just another example of Michael Saylor and MicroStrategy taking raw Bitcoin and creating a new financial instrument that is has unique properties that could be attractive to certain investors for what they need and want. And so, he's called him like he's made the analogy of like an oil company, right? Taking raw oil, crude oil, and then making like gasoline because it provides different use and utility. And there's reasons why people would want the gasoline and not just the crude oil. Um,
Yeah.
and so that's the
It
best way
makes
I
I
can
mean, it makes
explain
a
it.
lot of sense,
Yeah.
and I think like something as someone who didn't study finance, like I've begun to learn and appreciate is that you've just got there's a big difference between what an investor, particularly institutionally, might desire versus what mandate they have. And it seems
Exactly.
like he's offering like a pretty broad menu at this point that
Yeah,
would
broad
enable
menu
almost
of yeah.
anyone.
There are Bitcoin-backed securities, so it's a broad menu of getting exposure to Bitcoin, and investors need different things. Um,
Mhm.
Talking institutional investors
But
and,
at the end of the day, though, you have to have a bullish base case for Bitcoin to be
absolutely.
interested in these products because you're not looking at MicroStrategy, the software company, probably, and saying we're going up
Yeah,
10x
they're a
from here.
Bitcoin treasury company, That's what he
Yeah,
says, and that's what they are. And so
yeah,
you have to be bullish on Bitcoin. There's no really reason to, not be to own these things if you
yeah.
don't. Now, the other thing I'll say is that I didn't mention, just like a really other thing, is that, like, there's something called capital stack or, like, any kind of company, like, the seniority in the capital stack. And what that means is, like, when if a company goes bankrupt, the bondholders gets paid out before the shareholders, so the equity holders. And so that's why another reason why bonds are considered safer. So if the company gets into trouble and they have to, go bankrupt, bondholders get paid first, and then the stockholders get everything else. So in a way, you can have the equity holders completely wiped out, and the bondholders get all their money back, or at least part of their money back, if that makes sense. So they have seniority in the capital stack, and so in the way this works, like it goes convertible debt holders, preferred stockholders, regular MicroStrategy stockholders. And so if anything happened to MicroStrategies, which is, there's still counterparty risk there. That's just another reason why it might be attractive to an investor that I didn't mention.
yeah, yeah. No, that makes a lot of sense. All right, I've got one last topic for you. I'd love to cover. We should have talked about this earlier on when we were sort of tangential to it. The repeal of the income tax, the introduction of tariffs. So just in the last couple of maybe 2 days ago, I think the Trump administration slapped 25% tariffs on most goods in Canada, Mexico, I think China as well. I don't know if it was 25% across the board, but high tariffs. And he's talked about repealing the income tax. It seems to me like uh, you can't have I'd love to get your thoughts on the implications of one or and both of those and how maybe both of them together, would affect things. I know tariffs seem to me to be inflationary. They're gonna drive prices up, reduce competition in the United States. I I've wondered though, but if you countered that with people have more money in their pockets from the repeal of the income tax, does that sort of offset? I know the problem is 50% or whatever if people don't pay income taxes, and so they're not benefiting from income taxes being reduced or eliminated. They're just paying higher prices on their goods. First of all, am I sort of getting that right? And then I want your opinion on, what do you think is happening here? How does this play out?
Yeah, there's a lot of debate right now um, about tariffs, whether they're inflationary or not. And personally, I just like I feel like I need to like research it a little bit more to speak that intelligently on it. I kind of lean towards what you just said. It kind of makes sense on the face to me that it would be inflationary as domestic producers have increased prices on the imports because they have to kind of import raw materials and other things, and um, supply chains are a little different than in the past. They're much more integrated and global. They were kind of simple back in the day when people reference tariffs and how we didn't have an income tax and it led to all this. It's kind of simple. Like we made stuff domestically, and then imported like finished goods. Whereas now everything's so connected and it's very a lot more complex. And so like eliminating the income tax, it goes back to like what I said with like the fiscal deficits. It's like, yeah, okay, you reduce the tax revenues though. Remember it's like half of the equation of these deficits. And you better like those tariffs better fill that void. I don't believe in the income tax. I don't like taxes in general. I think people should have more money in their pockets, and businesses should have more money in their pockets. And so I also said like if we're gonna fix the deficit problem, we have to somehow untangle the Gordian knot of tax policy and asset price inflation. And so if like this crazy idea somehow works, it's interesting. Now, what could happen though is there's like retaliation. What we're seeing right now from Canada is a perfect example where they slap on a tariff of their own. And this is kind of what we saw back in the 1930s when there was a tariff legislation passed where we saw a lot of retaliation of tariffs from trading partners and global trade dropped 60%. And, that's the concern is that you tick everybody off and then there's just slowing economic growth because all the supply chains are not moving as efficiently. People are distrusting of one another, slapping tariffs on everything, like it impedes free trade, right? You want these things to run very freely. It's so they get cheap goods. Like one of the things people don't understand is that from the last 30 years, I feel like, um, what's the word? Underappreciate the deglobalization and the cheap labor, access to cheap labor and access to cheap goods from deglobalization and those free flowing supply chains. Uh,
Mm.
and that was the unipolar world, United States, and now we're moving into a multipolar world. And that's inflationary. If we're moving into a multipolar world where there's more trade restrictions and animosity between trading partners, if one was very deflationary, then this one's probably inflationary. Reshoring the supply chains, reshoring the manufacturing, that all has a cost and it's inflationary. And if you even look at the trade restrictions since 2019, BlackRock had a good chart. It showed that the trade restrictions have tripled since 2019 from like
Wow.
1,000 to 3,000 around the globe. And that's not good. I mean, that's just like, it just impedes the free flow of everything. And then if you're thinking about currencies, and you're thinking about like government currencies and them being weaponized and having currency wars, then yeah, I would say an apolitical one is going to become a lot more popular in that world. That's censorship resistant. And so I saw, and this is more big picture, right? Like I don't know if the tariffs are going to work, and that's going to bring in the taxes, and if they're, but I do know that like more animosity and more weaponization of government controlled money is going to lead to countries all around the world and individuals all around the world being attracted to a non-government alternative money. And it's that's it, I saw a little blurb in the Wall Street Journal. It said cross-border trade war hits borderless Bitcoin.
Mm.
That was really interesting because it's like it highlights the short-term volatility and maybe you know the wrong reaction, I would say, from this, because in the long term, the borderless trade of Bitcoin, this is extremely, I think, beneficial to Bitcoin, a trade war or more trade restrictions.
Yeah, the that lack of friction that Bitcoin offers is, I think, very underappreciated. No exchange rates, sanction free, censorship resistant. Because I'm reading the book Currency Wars right now, and
That's a great book.
to the extent that there's an equivalent on trade wars, I would be very curious to read something like that because so many of these, like it's like I sort of fundamentally, obviously, I wouldn't be a Bitcoiner if I didn't fundamentally understand many of the problems that it fixes, but it just opens your eyes to these new things, and I think the trade wars are a big one. But it's this everything we're talking about is so multifaceted, and we are talking thousands of variables that all play into these things. And each time you kind of unpack a new one, it's like, well, yeah, Bitcoin doesn't have that that
Yeah,
problem.
exactly. And it's I think that is a great book. It's very before its time too, and that guy's kind of like a Bitcoin bear, but I do respect his knowledge about some of these things, and I appreciate the fact that he called a lot of this. I think that book was written in like
Or
2009 or something.
yeah, I think it was I think it was like 11 because it was.
Yeah,
I
it's
think
not
it's just
long.
after the kind of coming out of the financial
Yeah, and
crisis.
one thing really stuck with me from that book is it was kind of sobering, but I think it was trade wars lead to currency wars, lead to real wars,
Mm.
and maybe Bitcoin can prevent us from going down that route because now there's an alternative that's apolitical, that's borderless, that people can turn to. Um, but I do think he's right about that. I think it's like a precursor. It's a form of war to weaponize currencies against your trading partners and to basically force policy through that weaponization. And it's something that's been leaned on more and more. So I recommend people read that book. I really like that book. Thought it was a very prescient of what was about to happen, and it's still useful to read today. So
Yeah, I hadn't looked into the author. I don't know. I didn't know his
name's
opinion
Jim
on
Rickards.
Bitcoin.
He's a big
Jim,
gold
okay.
bug,
So
big anti
yeah,
Bitcoin guy. But like again, I respect different viewpoints, and
it's funny like the gold bugs. I think it has a lot more to do with ego than it has to do with anything fundamental. And like I kind of sympathize. Like if you've been pounding the drum on sound money for 50 years, 30 years, whatever, to like your lead racehorse suddenly no longer being the best and the fastest. You really got to swallow your pride, but there's no reason anyone who reads that book and it makes sense, or certainly someone who writes that book shouldn't be a Bitcoiner. Like
I
he's
agree.
just
I don't know what his holdup is, but
yeah, man.
I always thought he'd be or I don't know, understood the value proposition a little bit, but
Just
it's
maybe
meant
he
for him to be
hasn't read
stubborn
enough.
about it. I've followed him along because, like I said, I like that book, and but yeah, unfortunately, not yet. Everyone gets Bitcoin at the price they deserve.
That's right. All right, man. Hey, we're past an hour, so let me just ask you one more question. And this is one I ask everyone: what is an unpopular opinion that you hold, and you get bonus points if you offend some Bitcoiners with it?
Oh man, I don't know. Like maybe the I mean maybe it might be you know what I said earlier about the spectrum of custody solutions and just how I think all of it's kind of accretive to Bitcoin's adoption as long as the risks are clearly explained
Yeah,
and education's right. I mean, I think some facets of Bitcoiners would maybe disagree with me on that. But I just think like all of these things in terms of nation state adoption, government adoption, as long as Bitcoin's incentives are right, and that no matter how large or powerful or politically connected an institution or a group of individuals is, that they can't change the protocol or manipulate it, then it's all good. Like I'm not gonna like scream against BlackRock getting into Bitcoin or issuing an ETF or a government because to me it's just natural. And so yes, I think we're all in this stage of like we were here when Bitcoin was growing up and we believe in self custody. And I think as long as that's protected and accessible to anybody who wants it, I think that's a great thing. And I think it needs to be preserved absolutely for not just freedom, but also the health of the network. But that's maybe a thing that maybe some Bitcoiners would disagree with me on. But I
yeah.
just, I think it's a natural growth of Bitcoin as a technology that it's kind of inevitable.
What I'll say to that, you know that myself and I mean, you heard me talk on self custody and the Bitcoin ways
Yep.
position, and like we're very dogmatic. But at the same time, I think here's the important point you touched on there, and what is vastly misunderstood, and that is what are the risks of doing any sort of custody solution.
Totally.
And, I think a lot of people are in the ETFs, for example, or, leaving their keys on an exchange, and they simply it hasn't really been solidified in their minds what that means. And like maybe it's a risk that they're willing to take, but I don't think it's been well thought out by most people.
Yeah.
And so the important thing is really just that understanding of risk.
Yeah. I think
If you're willing to take on risks that I'm not going to, I mean, so be it. If you lose your stack though, because you did that, I hope it was done with, informed consent on the front end,
yeah, and if the risks weren't properly disclosed, then that's kind
Yeah.
of, yeah, and I totally understand. I'm like preaching. It's just like maybe we disagree on that, but it's okay. And yeah, I mean, I just it's like this thing like everything's good for Bitcoin. It's kind of a funny mantra, but it's something that I've really found to be kind of true over the years.
Yeah. Makes sense, man. Well, hey, Sam, we covered a lot of ground, man. I really appreciate you taking some time. Good chatting with you again. And looking forward to this one coming out in a few weeks. I think these are just a lot of things people have questions on, are looking for answers to, and none better than you to kind of walk everyone through it. So thank you for your time. Why don't you give a handoff and tell people where they can find you?
Yeah, yeah. Thanks for having me on, and thanks for all the work you're doing at the Bitcoin Way. I think incredibly important stuff you guys are working on there. So kudos to you and the team and Tony. You can find me on X at Sam Calla, SamCallah. Post a lot of analysis there. If you want to read some of the recent reports, I've collaborated with Lynn Alden on a few, and I think those are at lynnalden.com. The great Lynn Alden. She's great. And so you can find those there if you're interested in reading those. And I also write the news block, which is a weekly market update with my wife, Natalie Brunell. So you can find that at what's it, thenewsblock.substack.com.
Perfect. All right. And everyone listening, check out all of that stuff. His work with Lynn's fantastic. Obviously, you're a gifted writer as well. Lots of good content. So, Sam, thanks, man. We will catch up again sometime soon.
Yeah, thanks for having me, Michael. Have a great day.
Cheers. And that's a wrap. Again, I hope you enjoyed my conversation with Sam. I know I sure did. Covered a lot of ground. Do me a favor, if you like this episode, if you're enjoying the channel, give us a like, subscribe, share it with someone, leave us a comment. Any sort of engagement is always helpful. Go follow Sam on X. Check out some of the work that he is doing. He's a fantastic writer, has a depth of knowledge in this area, and just tons of great content coming out. If you're interested in Bitcoin self-custody, proper 100% self-custody, go to thebitcoinway.com/podcast. We can help you do it the right way the first time, remove all counterparty risk from your setup. We also help with online privacy phones. We have a Plan B residency option as well for all of your self-sovereignty needs. You can follow us on X as well. We're at @thebitcoinway_, and you can message me, follow me there at @theothermjordan. And as always, stay safe, stay sovereign, and remember, the yield on Bitcoin is freedom.